I'm Ellis Martin. Join me now for a conversation with Jordan Trimble, the President and Chief Executive Officer of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S. Skyharbour Resources is a preeminent uranium and thorium exploration company with projects located in the prolific Athabasca Basin of Saskatchewan, Canada, which was ranked as the best mining jurisdiction to work in globally by the Fraser Institute in 2017. The company has been acquiring top-tier exploration projects at attractive valuations, culminating in 5 uranium properties totaling approximately 200,000 hectares throughout the basin. In July 2016, Skyharbour secured an option from Denison Mines to acquire a 100% interest in the Moore Uranium Project, now the flagship project, which hosts the high-grade Maverick Zone. The company is run by a strong management and geological team who are major shareholders with extensive capital markets experience as well as focused uranium exploration expertise in the basin. Jordan, welcome back to the program.
Thanks for having me again.
A lot's happened since we've spoken about a month ago. You have some news out. You've expanded the Maverick East Zone at the Moore Uranium Project with additional high-grade uranium discovered in the basement rocks. Tell us about it.
Yeah, so these are the remaining 4 holes that we've announced from our fall 2020 drill program at our flagship Moore Lake project. It's on the eastern side of the Athabasca Basin, proximal to infrastructure and just east of our largest strategic shareholders' flagship project, the Wheeler project owned by Denison Mines. It's a project that we've been drilling now for the last several years, but in particular in the last several drill programs, we've been focused on these new and refined basement hosted targets. And you and I have talked about this in the past. Our exploration strategy and drilling focus has shifted more to finding feeder zones in the underlying basement rocks. We believe there's a major discovery to be made in these basement rocks, and we continue to, with just a few initial holes, continue to find higher grade mineralization at depth. We feel, though, like we've just scratched the surface and there's more to come. So the announcement was a couple of holes in 2 of our longest continuous zones of uranium mineralization in this recent drill program, both 17 to 18 meters of continuous uranium mineralization. Back in December, we announced the first hole, which was 17.5 meters of 0.72% U3O8, and within that there was a 10-meter zone of 1%, again in the basement rock, so finding higher grade mineralization at depth in these basement rocks. And then today we announced another long zone, 17.9 meters, grading 0.28%, and within that there's a zone of 1.09% over 2.5 meters, again hosted in the basement rock. So we're seeing the tenor and the grade of the uranium mineralization pick up in the basement rocks. We feel that there again is a lot more to be discovered there. We've only drilled several holes testing these targets. This is at what's called the East Maverick Zone. And so this is just a small little part of a 4.5 kilometer long conductive corridor called the Maverick Corridor, which is the main structural corridor on the project and host to the main target that we've been drill testing over the last several years. We've really only systematically drilled just over half of it. So there's room to move and expand along strike and room to expand at depth in the underlying basement rocks. And one of the other bullet points from the news release worth highlighting is that we discovered some higher grade copper up to 2.3% obtained in graphitic clay-rich fractures within a broader zone of uranium-enriched and clay-altered granitic pegmatite, and this was discovered 100 meters below the unconformity. So we're seeing mineralization now even deeper below the unconformity in the basement rocks in some exploratory drill holes, which is very exciting and needs follow-up work, which we're planning to do here come February, a drill program that's currently being planned, fully funded, and will commence drilling again in the coming months to follow up on these results and to test some new targets as well.
And you're cashed up for this drilling, aren't you?
We are, yes. We raised money in the latter part of last year. Most of the money that we've raised recently has been institutional money coming in, which is great to see. And I think that illustrates the renewed interest in uranium and in the few active uranium companies that are still around here. I think as we see the market continue to improve, the uranium market recovery, which is accelerating, I think we'll see more and more investor interest, in particular institutional investor interest, come into the space.
I think that's a lot of generalist interest as well. I don't know for a fact about the breakdown. I just know that during the last month, since we spoke last early part of December, I believe, your stock has gone up about 20% or so, and that is pretty much puts you at the top of my portfolio as far as movement is concerned.
Yeah, well, I think if you look at it from November, it's almost up 80 or 90%. There's been a move across the board. There's been, as I said, renewed interest in improving sentiment in the space. And there's a number of reasons for that. We covered a few of them early in December, but I think it's still the early days. One of the key things to note is the combined market capitalization of all publicly traded uranium companies is still less than $20 billion, even with the recent move. So it's still just a tiny space, and capital flowing into it is going to move it significantly higher very quickly. We've seen that with some other sectors, and we've seen a lot of money moving into the equity markets and to specific asset classes. And uranium, as you and I have discussed for several years now, has been one of the more unloved and underfollowed sectors out there, and it's now starting to get attention, rightfully so. It provides the fuel for nuclear power plants, the only source of carbon-free baseload electricity, very reliable, safe, and cost-effective source of electricity generation. And as the world moves to decarbonize, and that's one of the reasons we've seen money flow into the sector, is it's started to get the interest of the ESG crowd. There's a lot of money floating around for ESG sectors, and nuclear is going to be an important part of that and of the move to decarbonize the electrical grid globally. Going forward, we've seen now the U.S. announce that they're planning to go carbon neutral by 2050. China, the largest polluter in the world, planning to go carbon neutral by 2060. They have to embrace nuclear energy as a part of that plan and as a part of that strategy. And we've seen that with Biden's $1.8 trillion climate budget plan, the rollout of small modular reactors in the U.S. We saw late last year this already happening in the U.K. with the Rolls-Royce agreement with the government to roll out 16 SMRs there. And then getting back to China and other parts of the developing world, India, parts of the Middle East, where you continue to see the growth in nuclear energy and therefore uranium demand, with larger nuclear power plants being built to power their cities and to provide that baseload carbon-free electricity.
There's some old timers probably listening to this broadcast that remember back in the 70s when the disposal of fuel rods was an issue, and it was a toxic issue. That's been completely eliminated. It's no longer an issue at all, is it?
Well, it's definitely not the same issue that they had previously. And when we look at the nuclear fuel waste, with earlier nuclear power plant designs, that was a big issue. Now, like any industry, the industry has advanced. The new nuclear reactors are much more efficient. They produce less waste. And so you see, as a result of that, over the number of generations of nuclear power plants and designs, you've seen these reactors become more safe and produce less waste. So yes, that is something that they've addressed and continue to address. But bottom line is, as we move to a world where we don't want to pollute the air, we're combating climate change on a daily basis, we have this incredible source of electricity generation that's been around now for many decades that's available. And it's a great complement to renewable energy, to wind, to solar, to geothermal, to hydro. And I think you're just going to see that macro trend continue to improve sentiment around nuclear energy going forward. We're seeing that across the world right now. And I'll just make one last note on the U.S. And this is, again, getting back to why I think we've seen a rise in the uranium company share prices over the last month to 2 months here. We're starting to see U.S. legislation that's positive for nuclear, that's positive for uranium mining in particular in North America. We've seen now this strategic reserve of about $150 million a year. That's about 3 to 4 million pounds of uranium that the U.S. is going to be stockpiling. We've seen the extension and amendment to the Russian suspension agreement to limit the number of imports ultimately coming into the U.S. from Russia of uranium. And we're just seeing a move towards, in particular, places like the U.S., we're seeing a move towards secure supply chain, reliable supply chain. So nuclear fuel for nuclear power plants. You've got to remember the U.S. is still the largest consumer of uranium globally. They have just under 100 nuclear reactors operating. They're the largest consumer of uranium. They produce less than 1% of their annual requirements, and they have to rely heavily on countries like Kazakhstan and Russia and Uzbekistan and parts of Africa for that supply. This is 20% of the electrical grid in the U.S., and a lot of that fuel's coming from places that may not be long-term reliable sources of uranium. So that's where Canadian and American and Australian companies stand to benefit.
You do have an Australian partner and a couple of Canadian partners. I want to talk about that in a minute. But how much uranium is there in the Athabasca? How much does Canada have? Can you sustain the world with what you have there?
There is a lot of uranium in the Athabasca Basin. It's the highest grade depository of uranium in the world. If you look at the two largest uranium mines in the world, being Cigar Lake and McArthur River, they have hundreds of millions of pounds of high-grade uranium. It's one of the few jurisdictions globally where you can produce at a low cost because of these high grades. To put it in perspective, 1% U3O8 equivalent to about 20 grams per ton of gold. And we've had results on our flagship project as high as 21% U3O8. And you can see very high grade zones of mineralization that result in very high value per ton ore that can be extracted. And so, yes, the Athabasca Basin for decades to come can be a reliable source of uranium for North America and for the world.
And yet in the junior space, in the junior mining space, there are not a lot of choices for viable uranium companies right now. I was going through my Rolodex, cleaning out some business cards the other day during the holidays, and there's companies that don't even exist anymore. They were taken out, like Hathor, Mega Uranium, for instance. They're gone.
Yeah, I mean, look, in 2006, 2007, at the peak of the last uranium bull market, there were over 500 publicly listed uranium companies at that time. I believe the combined market capitalization was well over 200 billion. That's decreased to less than 40, and as I mentioned, a combined market capitalization of less than 20 billion, even with the recent move. So absolutely, it's a sector that's not crowded, which is an exciting thing for existing companies in the space and for investors coming into the space. And I think the companies that have stuck it out, like Skyharbour and a few others, will stand to benefit the most.
Let's talk about the partner companies. You're involved with a few.
Yeah, so we have a secondary part of our business, as you know, that includes prospect generation, and we have a big portfolio of properties scattered throughout the Athabasca Basin, over 500,000 acres of ground in 6 drill-ready projects. Our flagship, Moore Lake, we own 100% of. We're focused on exploring and discovering new zones of mineralization at that project. That's really the key catalyst and value driver for the company currently. But we have other projects that we have successfully now brought in 3 partner companies to fund the exploration at, starting with 2 partners over on the west side of the Athabasca Basin, one of which is industry leader Orano. They are currently earning in at our Preston project. That's an $8 million earn-in for 70% of the project. Another company, Azincourt Energy, again, similar option earn-in deal whereby they can earn up to 70%. And in order to do that, they have to fund exploration and make cash payments. They're near completion on that small cash payment that needs to be made to complete that earn-in and to form the joint venture. And then just more recently, as we've discussed, a new partner company, which is quite exciting because they're based in Australia. It's an ASX-listed company called Valor Resources. We've signed a definitive agreement with them whereby they can earn in 80% at our North Falcon Point project. It's actually just south or southeast of our flagship project. And in order to earn that 80%, they have to fund $3.5 million worth of exploration over a 3-year period, make just under $500,000 in cash payments. And we are going to be issued 233 million shares of the company, approximately valued at just over $1 million. So it's a great complement to our focus at our flagship project. It brings in some additional cash, but more importantly, it ensures that these projects that we don't necessarily have the resources to go out and systematically explore and advance, it ensures that they get the proper exploration and development work on them. And in return, we get news flow from it, and we will retain a minority interest in these projects. It's also important to note that exploration in the Athabasca Basin, it's a high-risk venture. You don't always drill and make a big discovery. So having multiple irons in the fire, several programs, in particular programs that are funded by partner companies, that just increases the chances of the probability of making a new discovery and creating shareholder value.
Well, I'm a happy shareholder right now. Let's talk about the share structure of the company.
We have just over 98 million shares issued and outstanding. We have some notable larger strategic shareholders. Our largest individual strategic shareholder, Denison Mines, is a strategic partner of ours. We have a very close working relationship with Denison. David Cates, who's the president and CEO of Denison Mines, is on the Skyharbour board. And as I mentioned, we have, in the last year in particular, most of the capital that we've raised has been institutional, some new generalist funds that have put their hand up for the bulk of these financings. So it's exciting to see that new capital flowing into the space, and we're fully funded for our plans for 2021.
I've been speaking with Jordan Trimble, President and CEO of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S.